using its vast natural resources to fund road and railway construction projects with China. Finance Minister Mthuli Ncube says the government has begun talks with the China Railway on resource-backed financing arrangements. Zimbabwe is Africa's largest lithium producer, but years of economic mismanagement and political turmoil have left its infrastructure severely underdeveloped. The African Development Bank estimates that Zimbabwe needs about $34 billion to modernize its transport and logistics networks. The country's rail system is critical for moving minerals. Well, to discuss this further, we now speak to Kevin Tutani, who's an independent researcher and political economist that's based in Zimbabwe. Thanks very much indeed for joining us, Kevin, and welcome to the program.
Thank you for having me, Peter.
How significant is this proposal for Zimbabwe's economy, and why is government looking at resource-backed financing instead of more conventional borrowing?
Well, when I look at it, there's nothing out of the ordinary with government pledging, its returns from mineral resources. What's happening here is the government is pledging its incomes, revenues from mineral resources, not necessarily minerals underground. So what's going on here is you have joint ventures where the government is mining with the private sector. Those are included royalties from mining companies that government is taxing through the year. Those are included. But for me now, what is most striking is that we have only one potential contractor who's appeared to participate in this financing deal. Now, when you have one contractor such as China Railway, what you could have is greater margins than usual and a lot of corruption going on. So I'm saying for this kind of deal, it has to go to tender in with this same financing method and not necessarily be we're having just China Railway as the only contractor.
Yeah, you've just mentioned the C word, corruption, and minerals across the continent have always been problematic for us. Resource curse, I think we've coined it. And there is a danger, isn't it, as you've said and have started to describe, that wherever minerals are involved, transparency has to be key. Hello, Kevin, are you still there?
Indeed. Oh, I didn't know that was a question, Peter. Yeah, you didn't pose it as one, but yes,
I
we
must ask
need a
my
lot of
questions better
transparency.
than.
Sorry, Peter. Let me continue though. We need a lot of transparency here, because you look at in 2018, you look at in South Africa, the state capture inquiry into the State Capture Commission, which was officially known as the Matlanga Commission, actually found, this same company that we're talking about, its supplier, which is China Railway Rolling Stock Company. The Matlanga Commission found that it was involved in serious corruption, where in its financial statements, what it presented as costs to SARS, South African Revenue Services, was eventually discovered to be kickbacks that were going to the Gupta brothers, the Indian brothers that were politically exposed to Jacob Zuma. So what happened in the end is that South African Revenue Services eventually garnished the bank accounts of China Railway Rolling Stock Company, on the findings that it was misrepresenting costs. What it was presenting as costs were actually kickbacks going to the Gupta brothers. So in this case, we also need such a contract, to such financing models to actually involve, tender-like processes where a number of contractors are competing besides China Railway. Because what happens now is we then need those tenders to be audited and to ensure that there's no corruption and kickbacks going on. Because there's a big possibility when you now have one supplier, such as I'm not pointing to China Railway as a corrupt participant, but I'm saying there's a big possibility because you have one supplier.
Why do you think it's taken until now to start thinking along these lines? I mean, Zimbabwe has had resources since the beginning of time, and I think about things like the Marange diamonds, where billions and billions literally was floating on the surface of rivers there. And yet we never saw the benefits of that. What's changing, do you think?
Zimbabwe is in a moment of, in a season of governance transition. Under the Mugabe regime, obviously, which was in charge for almost 40 years from 1980 until 2017, what happened is you had a lot of political leaders who were not rehabilitated from their transition from the liberation struggle, the time of colonial resistance against imperial oppressors of Europe, until they got into government. They were not quite rehabilitated for the roles they were playing there. They were actually participating in there, and so corruption was rampant. And then you see that we have what now Zimbabwe calls the Second Republic, which is now the leadership under the administration of President Mnangagwa, which is now which we have to date from 2017 until now. This leadership has managed greatly to contain corruption and a number of misgovernance issues. But to be fair, corruption is still there, and what is left of it is now what the country has to deal with. But President Mnangagwa has done a great deal of work to, get it out of the system, although some still remains and needs to be addressed.
I guess the terms also need to be carefully looked at because I'm fearful that we might be selling off our assets on the cheap, actually.
Yeah, what we have, Peter, is the country is not pledging minerals underground in such financing models. So that is more like selling our assets cheaply, because if it pledges minerals underground, what that means is any default on loan repayments means, China Railway, the contractor, would then, what you take those minerals as collateral and sell them to the highest bidder in the global markets. But this is not what is going to happen here. What is going to happen here is the government is going to commit, to say that any revenues from minerals that is within its joint ventures with private sector, where it is mining, okay, and for royalties from mining companies, any such revenues, the government is pledging those to go nowhere else but to repay China Railway for infrastructure development in Zimbabwe. But the point of contention with someone like me is, if we only have one participant in such a financing model, we are unnecessarily creating so much room for corruption and kickbacks to, untrustworthy, politically exposed people in Zimbabwe and on China Railway side, and so forth. So we need this, financing model to have tender-like processes where other participants, such as perhaps General Electric, European, infrastructure managers who manufacture, railway infrastructure, we also need them to participate so that the best, offer wins with the lowest price, best quality goods. This is what I'm saying is better.
Kevin, we're going to have to leave it there, but thank you so much indeed for your analysis and insights. Thanks for your time. That was Kevin Tutani, independent researcher and political economist based in Zimbabwe, talking to us about this new way of financing infrastructure development using natural resources as payment.
The Global Entrepreneurship Congress Africa returns to